Hello, my name is Nina Dunn and I'm a Director of the Alternative Future Foundation. As part of Sydney Alternatives Investment Week, I'm joined today by Nik Persic from Bentham Asset Management. Thanks for joining me, Nik.
Thanks for having me, Nina.
Okay, I'm going to ask you a couple of questions just
Sure.
so investors get to know you and your investment thesis a little bit better. Let's get into it.
Great.
Okay, in a sentence or two, or give me your high-level pitch of the Bentham Global Opportunities Fund.
The Global Opportunities Fund, the Bentham Global Opportunities Fund, is a fund that is a global fixed income and credit fund that its investment universe is the global markets, and really its goal is to look for fixed income markets that offer the best value for the risk, and we can ignore sectors that don't offer value and even go short. But the goal is to generate a return of 3% above cash through the cycle.
Okay, so your fund has wide allocation ranges and uses many instruments. How does that flexibility help you manage interest rate and credit risk?
Yeah, I think it is very flexible, and we think that's important. The flexibility allows us to have either high-grade defensive bonds or invest in very risky bonds as well. We can have either floating rate bonds or fixed rate bonds. And that really gives us the opportunity to go long or short individual sectors, names, or even interest rates, which has been important in generating returns.
Okay, so you just mentioned you can rotate between riskier and more defensive credit sectors. Can you give me an example of how that's played out more recently?
Yeah, well, more recently we've really upgraded the credit quality or the quality of the portfolio. We've trimmed down the non-investment grade credit within the portfolio. We've increased our allocation of high-grade corporate bonds and government bonds. And really, after a very long period of low interest rate duration over the last few years, we've increased the interest rate duration of the portfolio.
Okay. So you've been investing in the fund for over 20 years. How have seeing different market cycles shaped the way that you manage risk today? Like, how's your strategy evolved?
Yeah, we've always evolved as markets have evolved in terms of regulation, the markets themselves, or the instruments, or the borrowers, or even financial conditions, and that's been really important in continuing to generate returns. If you look at the GFC, one of the key learnings coming out of that period was just really focusing on downside protection within fixed income. Investors like the yield, but they also don't like drawdown. So we've really focused on managing that downside risk within the portfolio.
Okay. All right, let's finish on something fun. If your fund investment style was a cocktail, what would it be and why?
Well, I'd say that one cocktail would be something like an old-fashioned, which we think is a simple cocktail based on some timeless ingredients like whiskey, sugar syrup, some bitters, a bit of orange peel, and really you won't find any gimmicks within our cocktail. There won't be any umbrellas or flames or dry ice smoke. And I think the cocktail will be very timeless cocktail through.
Great, so what you see is what you get.
Absolutely.
Oh, great. Thank you so much for joining me today, Nik. If you would like to find out more about Sydney Alternative Investment Week, please visit sidalts.com.au.